Yes. They rightly state that don't wait to buy real estate and wait. Namaste. I, CA Revati Abhijit Murkute, the moderator, warmly welcome you all for this webinar in Know Your Law Series 63 on professional opportunities in small and medium real estate investment trust, SEBI, REITS, Regulation 2014, organized by the Committee on Commercial Laws, Economic Advisory, and NPO Cooperative of ICI. If your actions create a legacy that inspires others to dream more, learn more, do more, and become more, then you are an excellent leader. This exemplifies the CCLEA and NPO committee. It is focused to encourage the chartered accountants to shape the strategy and policy that unlocks economic, financial, and social value by combining the analytical foresight with commercial acumen. One of the core areas of this committee is to serve the multifunctional task of analysis, knowledge dissemination, inputs to regulator on policy formation, to develop and publish technical guidance, background materials, etc., and to create awareness for professional opportunities for chartered accountants in commercial laws, economic advisory, and NPO cooperatives. An expert in the field of RERA, litigation, arbitration, SEBI, ECB, FEMA, AIF, IFSC, forensic, due diligence, social stock exchange, and others. Our eminent speaker, CA Amit Kumar Kedia, has been delivering lectures on various platforms and has been associated with Confederation of Indian Industry, Federation of the Indian Chambers of Commerce and Industry, and a member of ICI RERA Study Group and Task Force. His expertise in social audit and NPOs sets him apart. Through his session, Sir shall throw light upon the concept, the regulatory landscape, the market analysis, SM REITs opportunities, tax implications, future trends, and other core topics. Without further delay, I thank you, sir, for accepting our invitation, and I invite Sir Amit Ji to kindly deliver the session.
Thank you. Thank you very much, the committee and the team members of ICI for giving this opportunity to discuss this upcoming opportunity in our industry as profession and for the real estate sector. Friends, as the topic very well says, professional opportunities in the small and medium REITs has been notified by SEBI on 8th of March 2024. Friends, I may tell you that in these presentation, every slide is in a manner a professional opportunity for each and every one of us. As chartered accountants, as we know, the growth of the country, the contribution in the GDP, without our expertise putting in, would not be fulfilled. And when real estate is a sector which is the second biggest contributor after agriculture in GDP, that gives a better opportunity, a better thought moving forward when we are seeing India as Viksit Bharat by 2047. Friends, as this slide very well defines and clearly tells, small REITs, big dreams, small investments, and infinite returns. Yes, today, when somebody looks for a real estate investment, then he or she needs to have a minimum corpus for doing any of the investments in real estate. But with this concept of small and medium REITs, the way a retail participation is there in equity in a similar manner, it would be happening in time to come in real estate sector. So The dreams of our country citizens are not less, they are big, and the investments are small, which could be possible by this asset class, and the returns which would be coming with this investments would be infinite in terms of there would be a fixed return in addition to the capital appreciation which would be keeping on fighting with the appreciation of the real estate sector where the investments have been done. This is a small contents where like what we would be covering today. What are the opportunities and trends? These every slides, 43 slides gives 43 different opportunities for we as professionals in this small and medium sector REITs. Before moving, I just want to play a video of our honorable chairperson of SEBI, which was not a older one. It was just 20th of March 2024, when in a program she had came and shared these thoughts. So just playing this, just all.
This is one of my favorite products for the future, REITs. I believe that there's just so much latent demand in our country for real estate, and for each of us to own a little bit of that action and that wealth creation, and to try and participate in what can potentially be an inflation-proof income is so important. Again, we have found that when we shared this vision with the industry and said that in order to retailize, in order to democratize REITs, we need higher levels of disclosure and compliance. I cannot tell you the cooperation we got, and they've all agreed to a much higher level of disclosure and compliance so that the regulator has comfort to really retailize this product. And of course, consequently, we went ahead and announced something called small and medium REITs, which means that even assets as small as 50 crores, otherwise our threshold was 500 crores. So only the big boys were participating. We brought it down to a 50 crore asset, and we've reduced the investment size for just folks like you and us and everybody else to be a part of this entire area which is set to grow. Our own back of the envelope calculation tells us that over the next 10 to 15 years, the REIT, InvIT, and Muni bond market will be as large as our equity market today, 1x GDP. That is our belief. So where is that growth going to come from? Where is the capital formation going to come from? This is what our belief is, that this little piece of heaven, little piece of real estate, this little piece of infrastructure, democratized across millions and millions of people, is what is going to create the next one-time GDP market for our country.
So yes, friends, this is a very small part, but it would going to change the demography of investments. It would going to change the demography of our industry in real estate. Moving forward, friends, if you find any queries, any questions, feel free to put it in the chat box. We would be during our presentation also taking up those questions, and definitely at the end of our presentation we would be taking all of the remaining questions. So we first and formally would like to tell you about what REITs is all about. What is the past, how this REITs was there, how it is there in present. So if we see, it is a conversion of real estate similar to stocks, which is available freely, tradable, and in a liquid form. When we go and buy or sell a real estate, whenever we want to buy a real estate, we find it very difficult to identify. And whenever we want to sell a real estate, we find it very difficult to sell because of the liquidity issue, because of the marketability of this asset class. So, this asset, through the mode of REITs is being converted into units, which makes itself a tradable and easily transferable liquid asset moving forward. If we see the history of REITs, way back 1960, the REITs came first in US, and now it is so important that almost 35 countries it is having its presence, and it is the latest asset class which is now available across the country. And the latest example is France and Germany. And you may be surprised to know today the status is that in US the graveyards are having REITs. Even the prisons are having REITs. If we compare and think about India, then we have not even started. So this thing is the opportunity, and we all understand without all of us as professionals, these structuring, these listings, these marketabilities of these product in terms of education in the whole system would not be possible. If we see the total number of REITs which are listed worldwide, then there are almost 900 REITs, and approximately the market cap is almost $1.9 trillion dollars. Yes, $1.9 trillion dollars is the market cap of all the REITs together. And these listed REITs are steadily and in a stable manner are increasing day by day. So if we see in a graphical manner, then in 1960 the first REITs hit the US, where the formulations were there, but the final listing came in 1965. Then in 2003, France was the country where the REITs came. Then Japan, Canada, Australia, UK, Germany, and 2014 was India, and 2024 is where we are standing with the small and medium REITs, along with 40 other countries having the product of REITs. So, if we see the path in India, the consultation paper started, the thought process started way back in 2007, and then the final regulations were there with SEBI in 2014. And if we see today, there are five registered REITs. Out of them, four have already been listed. And the first one, which was listed, was in 2019 when the REITs was launched. And the four REITs in total have raised almost 80,000 crores, of which first REITs have raised 4,750 crores. And if we see the REITs which are registered in our country today, some of us might be knowing the names: the Embassy Office REITs, the Mindspace Office Business Parks, the Brookfield India Real Estate Trust, Nexus, and the Real Estate Investment Trust. The 361 Real Estate Investment Trust is, as of now, yet to come with their issue. And if we see the income which is generating, these incomes are the incomes which are fixed income. That is, the assets are completed, and now after completion, the assets are earning incomes. And the income is varying between 7 to 8% in terms of yield. In hands, the investor is getting around 5 to 7% after taxations. So, today, if we see the history of REITs and REITs in our country, along with the reforms which happened, like FDI, which was there in 1990, then SEBI regulations were there, the SEBI Act was there, and they were established in 1992. Later on, GST came, RERA came, Startup India came, Make in India came, Digital India was there. With all this frameworks, with all these regulations, all these regulatories, the real estate had transformed in a very big manner. And today, when we are standing in 2024, where the small and medium REITs, because of all these regulations, the digitalization, this would be possible. What happened for SEBI to bring this small and medium REITs, we would be understanding uh, at a later stage. But before that, if we see and compare the market, then if we see the real estate market, the investments in real estate market, that is around 80 lakh crore. If we see the mutual fund investments in mutual funds, the investments in mutual funds are around registered one. I'm just telling you the registered AUMs. I'm not telling that the one who are collecting the money and doing without registration. The registered one is having a market size of 55 lakh crore, and there are just 44 registered mutual funds which are controlling this 55 lakh crore. If we talk about the fixed deposits in our country, that are more than 100 lakh crore. And if we talk about demat accounts, then it is more than 15 crore demat account in our country. And in terms of REIT market, which has been assessed as on now, that is around 4,000. So you can just evaluate, you can just think even that even if 1%, 2% of the wealth which is distributed in other asset class, like the mutual fund, like the FD, like the equity, that comes into the small and medium REITs, then how big the market of the small and medium REITs is. And this calculation, like I'm not saying, this calculation, the video which we have just seen, which the SEBI, Honorable SEBI Chairman was telling, that down the line, 10 to 15 years, the InvIT market, the REIT market, and the municipal bond market combined together would be one time the GDP, which would be equivalent to the equity market. So when we are standing today and where we would be moving forward, there is a huge gap, and this gap would be filled by we as professionals in type 2. So, if we see the history of this small, medium REITs and REITs in our country, then way back 2013, the consultation paper came. 2014, the regulation was there, the framework was there, and the first REIT in our country came in 2019 with their listing. And as I told you previously, on 8/3/2024, the small and medium REITs came. Friends, what was the reason why the small and medium REITs got incorporated? was introduced by SEBI. As we might be aware and we all know, like after demonetization, after GST, after RERA, after there was a slump which was already was going on in the market in 2014-15, the real estate market absolutely crashed. And after this market got crashed, there happened that many platforms, because of the digitalization, because of the foreign funding which was available, there was lot of platforms which got created, and these platforms collectively collected money and used to put them in a real estate asset, which was named as fractional ownership, like owning a fraction of an asset by somebody was the trend which started in 2019. This is not a new thing. In earlier ages, when four brothers, four relatives, four neighbors, 10 friends used to collectively collect their money and used to invest, that was also a thought of a fractional ownership only. That they used to pool up their money and used to buy an asset for themselves. But in 2019, because of this liquidity crunch, many people started this platform, which was which is rather, I should say, is commonly known as fractional platforms, fractional ownership platforms. Then came the COVID in 2020, where because of the COVID, the real estate sector liquidity crunch enhanced. There where was the life which came to these fractional ownership platforms. Now, the small investors who are ticket size of 25 lakh, 50 lakh used to give to the fractional ownership platform, and collectively the fractional ownership platforms used to buy assets for these investors. In return, they used to give them the rights of the assets, and with these rights, the dividend and the capital appreciation of these assets was transferred to the owners. But SEBI was not comfortable with these platforms because they had a thought there could be a fraud which may occur because of these platforms, and they don't want to put any of the retail investors into any problem. So that was the background why these small and medium REITs regulations got incorporated, got notified on 8th March 2020. Now, what are the assets? In which form these assets would be allowed to come and get themselves listed? If we take an overview of that, then the prima facie condition is that these assets needs to be a completed assets, and the assets needs to be income generating assets. And what type of assets would be covered? Assets like office buildings, residential, warehouses, hotels, hospitals, factories, commercial buildings, malls. These all assets would be eligible to an extent. These assets are minimum of 50 crores. In detail, we will be understanding in our coming slides. But the assets which would going to qualify would be all of these assets. There is an there is an understanding among people in general parlance. It's an understanding that only commercial or office buildings comes into reach, but it is not like that. All assets are eligible. The only concern of these assets are that it should be completed and income generating assets. The residential assets are not so famous Reason because the yields in the residential assets are not so high income generating as compared to office or the commercial building. Because of this, the residentials are not popular, but we cannot say that the residential building are not eligible. So very well, the residential buildings are eligible, but it needs to satisfy the expectation of the investor who are investing in these properties. Similarly, there is a controversy in regard of warehouses, where it is said that warehouses are infrastructure, but the small warehouses which are in industrial or in the logistic parks, such warehouses would be eligible for the small and medium REITs. If the warehouse criteria is different, that is, there are in regard of infrastructure, then those warehouses would not be covered under small and medium REITs. So, friends, this was a small background which I wanted to tell you before we could have more move forward. So, under the REIT regulation 2014, there is a new chapter, chapter 6B, which have been introduced. And I have taken the key points of this chapter 6B. So basically, chapter 6B would be dealing with the small and medium REITs. Whole of the regulation, that is the REITs regulation, would be applicable, excluding some of the chapters to the small and medium REITs also. But for the small and medium REITs, specifically chapter 6B would be. So if we see the asset side, the assets needs to be at least 50 crore rupees. Now, the beauty of pooling this 50 crores is that there should not, you cannot say that there should be even a single asset, only a single assets of 50 crores. If there are 10 assets of 10 assets of 5 crore each, then pooling those assets could also going to sum up this 50 crores to an extent. If all these 10 assets are in different geography of the country, 5 in north, 2 in south, 2 in west, and so on, then also these assets combined together, if total 50 crore of 50 crores, then they would be eligible. In addition, whenever an issue is being raised to the stock exchange after the all due approvals of SEBI and the stock exchange, then the minimum number of investors who are pooling money should not be less than 200. So these are the basic condition which is there in the small and medium REITs. So all these issues will be coming under a distinct separate scheme, and every scheme could be to an extent highest of 500 crores. If the REITs come up with multiple schemes, then that would be allowed. And if the REITs scheme combined together crosses 500 crores also, then also in that case, it would be considered as a small and medium REITs only. A new concept have been introduced in this small and medium REITs, wherein the investment manager is having a key role. That is, this investment manager would going to do all the major activities in terms of setting up the REITs, in terms of managing these investments, in terms of the operations which would be carried. So all these activities would be done by this investment manager. So if we see the structure of the small and medium REITs, then the trust is the one who is holding the scheme. There could be multiple schemes, and the scheme could have multiple SPVs, and the SPVs can have multiple assets. So this is where is the beauty, where I think that scheme one is scheme of hospital, or scheme one is the scheme of office building, and scheme two is the scheme of malls. Then I prefer office space at more than as compared to a mall space. Then I can only invest in scheme one. I need not to go to scheme two. In a similar manner, maybe scheme one is having assets of say South India, and scheme two is having assets of North India. Then if I consider that I need to invest in North India only, then I can invest in scheme two. So this flexibility is what is the beauty of this small and medium REITs. Then these schemes, the trust, would be managed by the trustees and the investment manager. So why these small and medium REITs came? We have very briefly already discussed because of this fractional ownership platform. These platforms which was there in both residential and commercial property. And because of these fractional ownership platform, collective investment schemes was an thought which was coming again and again with the regulators' mind that if this leads to any fraudulent activity, then the money of investors would be lost. And when they were having a product similar to the REIT, similar to AIFs, similar to mutual funds, so SEBI within thought merged all these three regulations, I can say, and with merging of these three regulations, taking best out of these three regulations, they have came up with this small and medium REITs regulation. As we have discussed, access of property becomes bit difficult, but after these units get themselves listed at the stock exchange, the accessibility to these units, to these assets become easy along with the liquidity, because there are at least 200 investors which would be there. So at time it may be possible that one investor is willing to sell, and there are other investors in the market who are willing to buy. So the buying and selling could be carried on equally. The another beauty is that every quarter, 95% of the income which is being generated needs to be distributed to the unit holder. And every unit holder, now there is a consultation paper which is going on and which would be finalized anytime soon, which says that all the unit holders would be getting their dividend through electronic mode. So today it is declared, within 7 days it would be in the account of the unit holder. So you can understand how the liquidity, how the comfort of the unit holder is being created and it's been seen and addressed by the regulator. And as we know, every unit would have a portfolio distinct number which would be in a demat form. So putting the assets in demat form, nothing to worry about the assets, nothing to maintain those assets. You can understand that how big comfort this asset class, carrying on this asset class, would be having. And definitely these assets of which the units are being held are being carried on is being managed by the professional management, that is the investment manager. So friends, every point which we are discussing, maybe the incorporation, maybe appointment of investment manager, maybe appointment of trustee, maybe the unit holders, these all are directly or indirectly professional opportunities for us. Now, moving forward, there is a small structure which I have tried to make how the flow of this whole transaction, how the flow incorporation of this whole would going to happen. So first an application would be filed by the investment manager and the trustee. They both need to be appointed. Later on, the application form needs to be submitted to the SEBI. The trustee, the objectives, all needs to be presented to the SEBI. The investment manager needs to have certain net worth, that is of 20 crore rupees, of out of which 10 crores need to be in form of a positive liquid net. In addition, it needs to have an experience of at least 2 years, and if he is not having experience of 2 years, then he need to appoint a key managerial person, of which the number should be not less than two, and they should have an experience of 5 years. In terms of directors, half of the directors needs to be independent directors, and these directors should not manage any other REIT or SSD, and they should have an agreement with the trustee. Apart from that, if once the trust is registered, the REITs is registered, then the REITs is being given a timeline of 3 years. That is, they need to come in the mainstream. That is, they need to come with their IPO within 3. If they does not come with their IPO within 3 years, then they may apply for their extension. But if it is not being granted, then the REITs needs to delist themselves from the SEBI. Friends, we have seen and discussed about the fractional ownership platform, and SEBI had given 6 months to the fractional ownership platforms to migrate from the existing fractional ownership platforms to the small and medium REITs. So SEBI wants after 6 months, no fraction ownership platform which are coming under the ambit of small and medium REITs should be operational. They think and they have given guidelines that all these platforms migrate from the existing platform, that is the fractional ownership platforms, to the small and medium REITs. For the migrations, they have given a lot of flexibility in terms of the lot size. They have given flexibility that if any of the uh, platforms internally wants to purchase or sell their units among their unit holders, or if they want to create a trust, then all these possibilities are there. In terms of the eligibility, in terms of the number of holdings which they need to hold, that is a compulsory number of units which an investment manager should hold, they have given a relaxation if in terms of the debt of the existing unit holders are there, then that would not be considered, that would not be counted in this calculation. So, moving forward, what are will be the eligible issues for the initial public offer? We can uh, understand that they should not be debarred. That is the small and medium REITs. Their parties which are related to smaller medium REITs, the promoters, directors, any willful defaulter of SM REITs, uh, any promoter or director who are gone through the economic offense, any penalty or fine if it is due with the board, uh, any scheme-wise criteria which needs to be managed, which needs to be considered, should be there. Maybe the proposed assets, if we say it should be minimum 50 crores and not more than 500 crores, the minimum offloading, which is 25%, that needs to be there. Minimum unit holders, that is 200, that needs to be there. So all these criteria needs to be fulfilled while we are going for a initial public offering of a scheme. So how it would be done? A merchant banker would be appointed. Again, it would be appointed through an investment manager, and he would going to see the purpose and the eligibility criteria by the merchant banker who needs to perform this activity. So these are the basic conditions for the initial offer. Again, when we are talking about the initial offer, then again there are professional opportunities for us as chartered accountants where we can guide our client, we can do assessments of our client whether he is eligible for going in these offers. We can on the other side see the assets. There are assets worth more than 10 lakh crore. Yes, 10 lakh crore across the country which are eligible for coming under a small and medium REITs to a scheme. So if any of our clients, we know that these assets could be monetized and distributed to the retail investor, then we as professionals can tell our clients how the activity needs to be performed. There where the professional opportunity lies with. So an investment manager shall identify an assets with us putting ourselves into it. We can propose any of the investment manager these assets of our client, which could be later on a product for acquisition, shall the investment manager would going to file a draft scheme of a document to the merchant banker. The minimum unit size, the price of the unit would be 10 lakh rupees, and each scheme should be having a separate name. It would not be like that. If investment manager, that is a trust, can come up with five schemes. They are keeping the name of the scheme similar. The scheme's name should be different, and the asset size minimum should be at least 50 crores. And this is very important to note that every scheme should have a separate independent bank account, demat account, books of accounts, and maintain proper documents, and it should be annually inspections should be carried out by the trustee. So again, these demat accounts, books of accounts, these inspections by trustees, maintaining the separate bank accounts, these all would not be carried on or done by the investment manager or the trustees or the trust. Here, where like we as professionals who are having the expertise knowledge of the subject would be coming up and bringing up our expertise on the for consideration, and we would be the only ones who would be doing these and performing these activities of checking of these auditings, that all these things are being done in a proper, true, and fair manner. Then, in terms of the disclosures of the scheme offer documents, these disclosures needs to be done as per Schedule 3. These disclosures should not be misleading. So again, we would be undoubtedly it is to be prepared by the merchant bankers, but uh, by directly or indirectly, we would be there as professionals in giving the certifications, in giving the reconciliation to the merchant bankers, or maybe prepared by us and then vetted by the merchant bankers at the end. Scheme wise leverage, we need to take and consider total expenditure ratio scheme wise. That is all like we need to disclose in the offer document. Then we need to see that the investment conditions needs to be fulfilled. All these assets which we are seeing and talking about should be owned by the SPVs of the trust. That is, these SPVs would be 100% wholly owned subsidiaries of the trust, and the trust would be holding these assets through these schemes directly, and minimum 95% of the value of these assets should be invested in completed assets, and 5 could be held in form of liquid. So there is no ambiguity, there is no confusion that if any of the assets which are not completed, then the investments could be done in. No, it could not be done. Only investments in the completed assets would be done. 5% of the amount which is invested in liquid assets, if after a year or after whenever the assessment is done, if it is increases, for example, 5% has been kept in an FDR, and the FDR is giving a return of say 10%, then at the end of the year, the asset would be 5 rupees 50 paisa. If say 5 rupees has been invested out of 100 rupees, then a reallocation of this 50 paisa need to be done. That is 95% of this 50 paisa should be again being invested in the completed assets. So these things needs to be maintained and seen very stringently, very crystal clearly by professionals that these regulations are being followed as per the norms given. If we see the lending by the scheme of the SM REITs not to lend to entities except their own SPVs. So that needs to be taken care that it could not do any of the lending activity. So again, this is again another different professional opportunity. Why I am saying it that it's a different professional opportunity. Having said that, there are various modes of fundraising through these schemes. In terms, maybe any of our clients look forward that a fundraising is to be done for an issue, and we are having some foreign investors or Indian investors known to us who are interested in those investments. So we can guide them, we can suggest them that these all are the asset class which is available for their investments in case they seek any advice from us. So, Indian investors, foreign investors, fundraised by the schemes which going to issue the units to the unit holder. Fund may be raised through the SPVs of the schemes or may be leveraged by the schemes. But scheme wise, the leverage should not be more than 49%. That is what we need to take care and understand. In terms of maintenance of website, the investment manager needs to take care that the website is being maintained. All the assets which are there, which are proposed, which would be acquired, all details needs to be there placed on the website. All the links of the scheme should be there. That is the offer document needs to be there on the website of the investment manager. In terms of the issue period, it is normal to what is there in equity. Maximum time which is given is 30 days, and all these units would be in demand form, and the investment of these scheme would be opened scheme wise. So it is not that any pooling of the scheme in the demand at the trust level would be conducted. Every scheme would be having their separate demat account, and the subscription would be done through a billing mechanism, and the minimum subscription which needs to be put in place needs to be 10 lakh rupees, and the advertisement needs to be there as specified by the guideline of the SEBI. So you cannot violate the guidelines which have been issued by SEBI in terms of the thoughts which needs to be taken should be under the guideline, that is the LODR of SEBI, which have been issued. Now, if we see, this is a very important slide. Having said that, that there should be a skin in the game. That is, if the investment manager is coming and he is not a related party to the assets, that is the SPV or the assets which he is buying in the portfolio. In that case, what he needs to comply with is, first and foremost, it should not be a related party transaction. And secondly, whatever holding he needs to take statutorily, he have to take. That is, if the scheme is leveraged, then in that case, he needs to take at least 15% of the units which are there. In case the scheme is not leveraged, then he needs to take at least 5%. And if he takes more than this 15% or 5%, which is compulsory to be taken by him, then he needs to maintain that additional holding, that additional exposure for at least 1 year from the initial offer date. That is, for example, and the my uh, asset is leveraged, then I need to take compulsory 15% of that. Now, I choose not to take 15% rather than take 40%. So, in that case, it would happen that the 25% extra which I have taken, I need to hold it as an investment manager for at least 1 year. Only after 1 year, I would be able to offload that 25% excess which I have taken. Now, moving forward, if it is a normal case where I have taken 15 or 5% what was required by me, then in that case, after 4 years, that is between 4 to 5 years, I may reduce my holding to an extent of 5%. That is, in case I have taken 15%, then in that case I can offload in fourth and fifth year to an extent of 10%. Then in 6 and 10 years, I can reduce it to 3%. Later on, 10 to 20%, 20 years, 2%. And all time after 20 years, I need to maintain 1%. This is what like I need to always remember and always need to take care as a statutory compliance requirement of me as an investment manager. Now, as we were discussing previously, we need to hold maximum allotment to a single person to an extent of 25%. That is, a single person cannot hold more than 25% of the units. And the maximum public unit which I need to have should be anything between 95 to 85%, but minimum for public holding which I need to offload is at least 25%. That is to an extent of 25%, I need to compulsory offload in the public. Then, moving forward, in terms of maintenance of books, records, and book building process, all this would be done through a merchant banker and the associated intermediaries. And in terms of related parties, as we have discussed previously, that would not be allowed. The only related party transaction which is allowed, that is the payment of fee to the investment manager and trustee. That would be the only point that would be allowed. Apart from that, the transaction would not be allowed. In terms of asset valuation at times of property purchase or property sale, if the valuation is between 105 to 95%, that is, if the value is above 105 or below 95, that in that case, there needs to be an approval from the unit holders, which needs to be taken by the team, the investment manager and the trustee. For their approval, at least unit holders, three times the vote casted should be there. If they approve this, in that case only, they can go for a transaction above 105 value or below 95, else it would not be allowed. Then, moving forward, we have talked in detail about the listings, about the eligibility. Now, we will try to understand about the delisting of the units. Again, if the unit holders of a scheme falls below the limit, then in that case, if the project is not in existence, that is, a project for which the scheme was launched is no more in existence. If the board says that you need to delist, or the investment manager trustees who request for delisting for a prior after a prior approval from the unit holders, or the unit holders who applies for delisting or for delisting of investment manager of the scheme had sold the assets and the scheme and redeemed the units of the unit holder. In all these circumstances, there could be a delisting of the seat. That is, the scheme would be delisted, and if there are no scheme, then the REITs existence would be not be there. That is, the REITs have to be delisted along with their scheme. So it would going to go in two-tier manner. If at the scheme level nothing is left, then it would be delisted. If at the scheme level maybe something is there, but in totality there are no scheme, then the things can go to an extent to the REIT level. That is the small and REIT which is there registered with the SEBI would also may have to withdraw their registration. So everything which what we are talking and discussing today, the most important thing which is coming is the assets. Everything is been relied upon is what is the assets. So what and how these assets needs to be valued, how it needs to be presented in terms to the unit holders, they are a very important aspect. Again, this is in itself an independent opportunity of valuation of these SM REITs assets, not even the SPVs, but the assets. So you can understand how big is the professional opportunity which is hidden in these REITs. And you would going to see it is not a one-time affair that these valuation is required as we are doing audits, as we are doing uh, the due diligences. In the similar manner, these valuations would going to be a recurring task every year. So each scheme valuation should be done within 2 months from the end of the financial year. That is, the valuations needs to be put in place in a similar manner as we do our audits. And to an extent, maximum 4 years is the time period when a valuer could be there on board. That is, the board needs to change the valuer after every 4 years. Valuation of the assets, the declaration of the NAV should be disclosed by the valuer for the purpose to the recognized stock exchange based on the last valuation report as on 31st March. If any material development is there, that needs to be disclosed. Now, if we see the distribution, it needs to be done every quarter. Now, the minimum distribution needs to be 95% of the net distributable cash flow as per the Companies Act. So, whatever the Companies Act is allowing, to an extent of 95% is to be distributed. If any is to be retained and utilized, may be specified by the board. So net, if nothing is specified, nothing has been told, to an extent of 95%, it's to be distributed. Then moving forward, the scheme of the SM REITs needs to distribute 100% of the net distributable cash flow. So it would not going to happen that if 95% is coming, then the SM REITs, that is the trust, retains anything. The trust needs to distribute 100%. And there is a restriction over the time also. That is, as I have told previously also, it needs to be done every quarter. In addition, within 15 working days from the end of the quarter, it needs to be declared. And within 7 days from the declaration, the payment needs to be done. So, effectively, if I say worst case scenario, within 21 days from the end of the quarter, the distribution would be there in hands of the unit holders. And now, as I was telling, there is a consultation paper under progress. So, in time to come, everything would be in digital manner. So, the time period is also been expected to be reduced, and it would be directly going to the easiest mechanism, maybe in a shorter period, what we have discussed, that is 21 days. This is the fee which needs to be paid to the SEBI when the the application is to be made. Once the application is made, a fee of 1 lakh rupees is to be accompanied by the applicant. Then the intimation from the board would be there, and the board would be uh, taking a fee of rupees 10 lakh rupees. Then moving forward, there would be a filing fee. For the initial offer, it would be 0.1%. For the right issue, it would be 0.05%. And it would go to depend on another fees if they may be applicable from time to time. So, friends, if we see the rights and the responsibility of the investment manager, if we see the rights and responsibilities of the investment manager would going to make the major investment decisions. He going to ensure that all the legal compliances are being done. The management of the assets would be in his prerogative, and he going to ensure that the regulations and the investment strategies are being followed. If you're going to say all the management of the trustees, auditors, valuation, valuers, merchant banker, custodian would be the role and responsibility of the investment manager only. He would be the one who would be ensuring that the rentals which are there are being properly being uh, collected, maybe in terms of valuation, in terms of declaration of or distribution of to the unit holders, any insurance coverage which needs to be taken, all needs to be seen by the investment manager. So if we say the major responsibility and the overall responsibility would going to lie with the investment manager to manage whole of the assets. Then, if we see broadly the responsibility of the trustee, then he going to hold the asset. Then the overall review of the asset, overall working of the assets of and the work done by the investment manager is to be seen by the trustees along with the review of all the transactions, obtain the unit holders approval for any circumstance which is which should not be in control of the investment manager at the time when the investment manager is being defaulted. Then at that point of time the trustee would going to come in shoes of the investment manager. Then there is a code of conduct of the REITs which needs to be followed. All the activities, interest of the unit holders needs to be seen. He needs to see that any conflict, no conflict do arise. The fee which needs to be charged by the REITs or the parties to the REITs, or to an extent of the maintenance of the standards in terms of the regulation. They need to be very fair, very judgmental. They need to take care of the independent judgment of the professionals. They should not tinker with any of the professional responsibility which they have given by seeking favors or telling any adversely guidelines, giving guidelines to the any of the stakeholders, maybe any of the professionals, maybe. So, friends, if we summarize what we have understood, what we have captured as of now, in addition, what was there in the bigger REITs and in the smaller REITs, which is there presently, this slide would going to give you an holistic picture. So, in terms of the bigger REIT was the one which was directly investing or which might be investing through a SPP or a combination of both. But in the small and medium REITs, the total investment would be done through an SPP. Then, in terms of size, the size of the REITs, the bigger REIT, is more than 500 crores. But for the small REITs, that is the SM REITs, it would be between 50 to 500 crores. The type of property here is generally commercial real estate, but here the residential real estate would also be covered. In terms of allocation, 80% needs to be allocated in completed assets and 20% can be allocated in the under construction assets. But here the investments is 95% needs to be done in the completed assets only. 5% for the liquid assets could be kept. In terms of unit holders, in both the number of unit holders needs to be at least 200 and the maximum public holding needs to be 25%. The minimum investments now in the bigger REITs have been reduced by 10 to 15%, but still in the smaller REITs it is 10 lakh rupees. The reason for that is SEBI as of now wants that the small investors, a very small investor, which is defined as investor who is investing less than 2 lakh rupees, they don't want that he should be getting exposed to this asset class as of now till the time this asset class does not get or achieve more maturity in time to come. Then, in case of the leverage, in both 49% of the total assets is the maximum leveraged which could be taken. And in terms of distribution, 90% of the net distributable cash flow should be distributed in the bigger REITs. But in case of a smaller REITs, it is to an extent of 95%. And for the purpose of distribution, it should be half-yearly in terms of the REITs, and in terms of the small REITs, it should be quarterly. So these were the broad differences between the bigger REITs and the smaller REITs. Now we are there on almost last leg of our discussion, which is the tax advantage to all these three parties. That is the unit holders, the REITs, and the trustees. So, friends, if you have any questions, please feel free to drop it in the chat box. I would be happy to answer it as and when you put in place, or like after our presentation, we will be taking all our questions together. So, for the taxation, of the unit holders, if we see the interest, it would be as per the slab of 10%, as per the slab, and there would be a deduction of 10% as TDS. And for the non-resident, it would be 5% and a TDS of 5%. For the income which is received by the unit holders other than the interest or the dividend received by the SPV by REITs, it would both the cases, that is in case of resident and non-resident, it would be exempted. And the dividend income of the SPV, which is opted under section 115 BAA, that is the domestic company which are choosing for taxation at 22% rate, then a slab rate uh, would be applicable and a TDS of 10% would be there. And in terms of the NRIs, it would be 10% TDS, which would be applicable. For the purpose of dividend income, if the SPV is opting section 115 BAA as a domestic company, that is for 22%, that is, they are not opting for that, then in that case, it would be exempted in the dividend income which is being distributed. So, one who is opting section 115 BAA, there would be a slab rate which would be applicable, and for the one which is not opting, for them it would be exempt. And in terms of long term capital gain, it would be similar in a manner of equity, that is, after exempting 1 lakh rupees, it would be taxed at a rate of 10%. And for the non-resident, it would be as per the rate which is applicable. For the purpose of the short-term capital gain, it would be 15% plus surcharge plus cess, and for the non-resident, it would be rate as applicable. For the loan repayments by the unit holder, if applicable, right, which would be like applicable from 1/4/24. This is a changes which are there. Then the calculations would be done as per section 2056 to 12, and similarly in case of the non-resident, it would going to go. For the sponsor who sells the shares or the sponsors who transfer the shares to the REITs, then in that case, the capital gain would arise as applicable to them. If we see the taxation of SM REITs itself, then the interest received and which is to be receivable from the SPB, that they would be exempted under section 1023 FCA. For the dividend which has been received or receivable by the SPB, again it would be exempted. For the capital gain on sale of shares in SPV, the rate whichever is applicable as per the long-term capital gain and the short-term capital gain. And for the shares of SPV, it would be STGC, that is short-term capital gain by the slab rate, and LTCG as 10% without indexation above 1 lakh rupees. And other incomes, miscellaneous income, maybe bank deposit, money market fund, any such uh, incomes, then it would be charged at the maximum marginal rate. So, if we talk about the taxation of the special purpose vehicle, that is the SPV, SPV is the one in which the 100% holding is of the trust and all the assets are being placed in the SPV. Then the rental income from the real estate would be charged as per income from house property. Profit from investments of real estate, uh, infrastructure projects, such projects would be as business income. Any capital gains, if any appreciation in the investments, then the normal capital gain which would be applicable would be accordingly. And if there is any interest which is to be paid on the loan of the SME, allow deductions as per like the income tax. Taxation, like we have discussed, it would be 22% or 25%, whichever slab the SPV have chosen, accordingly it would be charged. So, friends, if we see this SM reach and we see how the country would be developed and we would be achieving the Viksit Bharat 2047, the thought given by our Honorable Prime Minister, as we have in our first present slide have discussed that real estate being the biggest contributor of the GDP, without the development of real estate, without the growth of the real estate sector, our country won't be able to be a Viksit Bharat by 2047. And for any of the development, mobilizing of funds is always which is required. And if the real estate players, the real estate investor, the ground citizen would going to be there investing in the real estates, then it would going to change the fundamentals, the mobility, the dynamics of real estate. In time to come, Gift City is also opening their fronts for listings of these small and medium REITs and the REITs itself, wherein the foreign investors would be able to come and invest in these small REITs in terms of dollar denomination. It would not be required by them to convert their dollars into the INR. They can directly invest in the Indian market. You may understand if an NRI looks forward to own a asset in Delhi or in Mumbai or in Chennai, an NRI can invest say 10 lakh rupees in all three cities. He can bring that money in dollar terms. He can take that money in dollar terms because of the direct listing facility at Gift City. And then he would not be required to manage these three assets. The management of these three assets would be done by a professional uh, who is then investment manager. So, with all this, we as professionals have a bigger responsibility. We as professionals are there to guide the industry in terms of the development which is required way moving forward. So, with this, friends, I thank the committee and all the participants a very time for giving their precious time for this presentation. And now, like I am open for the questions, if any. Looking forward for answers.
Thank you, sir, for this valuable insight. We do have questions. The first one is from Darshan, sir. Is there any LTCG on unit holders?
Yes, the unit holders in the REITs is being said as unit holders. You may understand the unit holders, if we take them to the equity market, they would be known as shareholders. So whatever treatment is being done to the for the investments done by a equity holder, a shareholder, the similar treatment would be done for an unit holder in terms of the capital gain, maybe the short term or the long term.
Okay, sir. So what about the farmland REITs that are there in picture now?
Farmland is land. They are not a completed asset. So they would not be eligible in the REIT segment. They are not the uh, candidate for the REIT.
Right.
Or I would go to say not right, they would not be eligible, would be a right.
Mhm. So if I talk about agricultural lands, it will not come under this
They will not come under. If you talk about land also, that would also not, because
Okay,
it's a completed asset,
right.
right? As of now.
Okay. So another question is, what is the role of technology and data analytics in increasing the operational efficiency within the small and medium REITs?
So, in time to come, definitely the subscription would be taken care by the merchant bankers, but the consolidation, uh, you can say the consolidation of the investors would going to play a very major role with digitalization. Reason for which that today, if we see many of the assets which are being sold in the primarily market of real estate are done digitally. Now, after COVID, even a lottie is not required to visit the site. There is a digital view which is being given to the allotee. In a similar manner, if any of these investments would be required from, as I have talked, from the NRIs across the world, or like if somebody is sitting at a very opposite geography, then the digitalization would going to play a very big role in creating awareness and in showcasing the real assets which are physically present maybe thousands of kilometers far.
Right, right, sir. So, as an investor, how will I know whether REITs is the right strategy for me or no? Like, if you go for the new investors, definitely they do know about all these trending things. But what about the traditional investors who do not rely much upon this at the moment? So, how do we actually convince them?
So if I talk, it's like the fourth birthday is also not being there. Like the fourth birthday would be coming on 8th of next month of this stream. So it's
Yes,
just a 4 month old baby,
right.
you can say. So the awareness, not to the traditional one, to the newer one, it is not there as of now in the system. So everybody is looking forward for the awareness. In terms of investments, there are two criteria. First and foremost, it has been well said that don't put all your apples in a single basket. Today, what is available in our country is equity to a bigger extent. Apart from that, gold, silver. If we talk about real estate, then if I am an investor and having a deep pocket to an extent of 10-20 lakh rupees and I go for any shopping, I won't going to find even a single thing in the market to buy. But if I want to put an exposure towards myself in an asset which can come to me with 10 lakh rupees, which is giving a better return or almost an equal return to an FDR, along with uh, uh, a hit from the inflation is being covered through capital appreciation in the asset, then these type of product should be there in my portfolio. These education would going to come slowly and gradually.
Yes.
The SEBI chairman herself have told that in time to come, when the education would going to improve, when there would be an awareness across the country, across the asset class holders, then in time to come, the things would going to pick up, and we are seeing like another 2.5, or maybe 3 months, the first listing of the small and medium REITs to hit the stock exchanges.
Right, sir. So you spoke rightly about the inflation or the macroeconomic factors. So, how will the macroeconomic factors like market conditions or economic cycles, how will they differently affect the SM rates differently from the larger rates?
So as of now, the larger REITs are having a very specific exposure, maybe towards the geography, or maybe towards the class of asset. Like today, if we see only the office and one REITs is for the commercial malls. Apart from that, there are no much product, and the major consolidation are at tier one city.
Mhm.
But today I am sitting at Ranchi, and I am finding that there is a mall just near to me, which is worth say uh, 50 crore rupees. And if I go and buy a shop in that, it would not going to come less than 40, 50 lakh rupees to me. But if in days to come, if that same mall is available to me in form of a REIT, then I would be more than happy to take a unit of 10 lakh rupees, and would going to say that yes, I have an exposure towards this mall, which I can see day and night every time. I am a owner of this mall, maybe a fractional of it, maybe a very small piece of it, but I am an owner, and I am earning something extra than an FDR, than a fixed return from this small. So these would be the dynamics which would going to change in time.
Right, sir.
And parallelly, as it is becoming an opportunity with the investors, we as professionals, without us, it would not be successful, it would not be possible. Having said that, if any of the audit, if an interest or a confidence to the investor is to be created, we as chartered accountants would going to audit, do the due diligence of the mall, going to give the figures to that investors, like whatever have been showcased has been correct, and if you invest in this, these facts and figures are being audited by us. Whatever declarations may be by the cash flows, by the audited figures uh, is being done, that would be audited and seen by us. So, lot of undoubtedly professional opportunities and responsibilities both would be coming all together in time to come with the all.
Right, sir. So, in line with this, most of the practicing chartered accountants, especially in the women sector, we generally focus more on the GST part or the income tax part, the income tax aspect that is going on. So, with the REITs that is coming up, with the SM REITs that is coming up, how do you encourage the women CAs to actually get into this, and what is the exposure for them specifically?
So, the best part is you have just talked about digitalization, and now you are talking about female members in our profession. So if we combine together, if our members are like not able to take responsibility out of home, then with the families also taking care of with the families and taking the digital modes into effect, they can come into the streamline of the small and medium REITs. Having said that, maybe the due diligence, maybe the audit part, these all could be carried on digitally. Maybe the awareness. There are many things like which are there to support digitally to the members. It is them like they need to showcase what opportunities they can find nearby them.
Right, sir. So there's another question. With the increase in sustainable and green building that we talk about, how will SM REITs incorporate the sustainable practices into property portfolios or into investment decisions?
So there are two newses, and which is not less than I think so weeks. Week is also I think so bigger. One news is 650 crore rupees. 2 days before, this funding had came to the embassy REITs for the sustainable projects of theirs. Other, another is a 1,000 crore fund from Japan to Gift City, which is again came for like building up the sustainability. So now in time to come, rather not time to come is the wrong fact which I've said. There are stock exchange in our country, the Green Finance Stock Exchange, which have been proposed on 13th January 2024 recently by our Honorable Finance Minister. And there are funds, green building funds, which are being there incorporated across the world. So in time to come, these small and medium REITs, which are developed under the green and sustainable funding criteria, these fund houses would going to fund and would going to invest in these SFDs. This is what like the future I foresee after listening your question and after the fact I was available.
Yes, sir. So the last question. ICI now has a special committee to address such core and trending topics for the members. So what is your suggestion to all the members out there to actually attend such sessions?
So, friends, again, the thing is, you should not keep all your apples under in a single basket. If, as very well said, we are doing our income tax, GST, then I would going to say, please start investing at least 10%, 20% of your time in other allied uh, practice areas, and you should make sure that the beautiful thing which our institute, the mother body of ours, is doing, the Institute of Chartered Accountant. We should attend these courses, we should attend these webinars, and that would not undoubtedly encourage ourselves, our expertise, our knowledge would going to encourage the committee members, the team, the council member, and the institute at large to come up with newer programs, with newer thoughts among all of us. And with this, I would again thank Secretary Hina ma'am, all the team members, our moderator, committee chairman of the Committee of Commercial Law and Economic Advisory and NPO Cooperative with coming up with such different topics, and they are like doing every week series of programs which we all should attend. Yeah, thank you.
Thank you, sir. So your valuable knowledge and guidance has definitely helped us in
Thank you very much, Ravati, for taking this moderation. Thank you very much.
I thank our honorable speaker, the chairperson and the vice chairperson of CCLEA and NPO committee, the technical team, and the entire team of ICI who has helped us put this wonderful session today. Jai Hind, thank you.